Going into the holidays and the new year, you still may have a lot of questions about your finances and what's happening with the economy. Are higher prices on groceries and presents part of the new normal? I'm trying to buy a car or move to a new home. What's my loan situation going to look like? And so much more. Steve Wyett with BOK Financial here to talk with me about that and more. Chief Investment Strategist. Good morning, Steve.
Dave, good morning. Thanks for having me back.
We're so happy to have you here. And of course, there's been a lot since we last talked with each other over the summer. A lot of people thinking still about inflation. So where is inflation now? How is that affecting us and going to affect us going into the first quarter of 2023?
So as we talked over the summer, our outlook was for inflation to begin to abate as we were going into the end of the year. Fortunately, that is happening. We've seen headline inflation start lower. That's the good news. It's still too high. The Fed still has some work to do. They've raised interest rates twice since our last visit. They meet again in the second week of December. They're going to raise rates again in December, probably one more time as we get into early next year, but these are going to be by smaller amounts. So the steps that the Fed has taken to this point are starting to work. Inflation is coming down. It's still going to take a little bit of time moving forward.
So they talk about, not wanting to overheat the economy and trying to, raise interest rates by doing that. So I guess it's harder to borrow money. Is that the idea?
Well, it is. And in fact, prime rate's up 150 basis points since we last talked, 275 basis point rate increases. We've seen home mortgage rates continue higher. They peaked at over 7. They've backed off a little bit as inflation has started to come down. But borrowing costs are higher, and they're not going to come down a lot anytime soon.
So that's the downside of these mortgage rates, or the interest rates, like you mentioned, going up, is it's more expensive to buy a home or a car if you're getting a loan. But there's also a good side to interest rates going up, right?
There absolutely is. Look, if you're a saver in this economy, we've been through 15 years of earning virtually no money on our liquidity. And now we're seeing short-term rates that are actually becoming somewhat attractive. And so this is that, as a borrower, this has been a negative implication, but as a saver, this has been a really positive implication. That's one of the areas of optimism that we have moving into 2023, is that the ability to earn a rate of interest on your money really changes the game on how we think about investing as we move forward.
So are we talking money market accounts? Are we talking certificates of deposit? Things like that, where those interest rates can just sit there and grow?
All of that. Now, it's you're going to continue to see those be relatively volatile, but you've got short-term treasury rates above 4.5% now. CD rates, money market rates tend to move a little bit slower, but they're going to continue to come up over time as well.
I wanted to talk about other investments, 401ks. A lot of folks have access to that. A lot of folks have access to that at a company where they match your contribution to 401ks. Right. What are we thinking about retirement going into 2023 and contributions?
So look, depending on your age, if you're a millennial, you got lots of time. I think the hardest part about where we are today is that inflation does make it harder to save. That $50 or $100 or $200 of every paycheck becomes a little bit more important when groceries are more, and even though gasoline prices have come down, overall expenses are higher. We just recommend that, to the maximum degree possible, stay with your plan. And as you mentioned, particularly if you work for a company that provides a company match, do everything you can to maximize that benefit. That's free money from the company, and it will make a big difference over the years as you move towards retirement.
I can't not talk about gas prices. A lot of folks have been noticing, especially getting ready to take road trips. A lot of Tulsa, a lot of Oklahoma's under $3 a gallon.
Right.
What are we thinking for 2023 gas prices as we go into the new year? Any insight?
We're going to predict gasoline prices are going to be volatile.
Okay.
They're going to move.
Well, that seems like a safe bet.
There's so many things that go into oil prices and what drives that. The global economy is a big part of that. So we worry about things like global growth from China and what that means from an oil demand standpoint. But look, we're not back to where we were pre-pandemic, but this is good to see gasoline prices come down. That's a tailwind for us as consumers. That's an area where all of us spend a fair amount of our money, and so to the degree that we can keep, let's hope oil prices don't spike higher. There's always the potential for some geopolitical issue, something with the war in Ukraine. If China does something weird, But just looking at the supply and demand, let's hope oil prices stay in this $80 to $100 range, and that's going to put gasoline at $3 to $4 a gallon.
And that wouldn't be bad for Oklahoma's economy either,
No,
based
right.
on what we are with the gas prices and oil prices in our economy. Steve Wyett with BOK, we thank you so much and happy holidays to you.
Thank you, and happy holidays to you too.
9:19 now. Broken Arrow is about to get a lot brighter this holiday season by about 1 million plus lights. After the break, we'll have a look at Rhema Bible Church as they get ready to turn on millions of lights for their free display.